Okay, good morning and welcome to the early bird. And here we're looking at the XJO, the ASX 200, the cash market, and we've been looking at this in terms of 5 waves up. And just let me outline this for us here. A little bit sort of like this, really, 5 waves like this, and it's looking at this as the fourth wave here, and then a fifth wave to move up there, and that's done that on the Friday. So look, essentially, once we get 5 waves here, then we'd be looking for an ABC correction and in like that. And once that's complete, then we'll be looking for 5 waves up through here. And yeah, so that's kind of it really. And we understood we didn't chase the market in these last 3 days here because we felt the market would have its little ABC correction there. So that's what we're going to be focused on this week, is this little ABC correction here, and then a push up through here. Now, the Asian markets are the same sort of pattern as this here, so that makes that a little bit easier. The US markets are slightly different. They're got a slightly different pattern to the upside, and they've started to sort of pull back already. And we'll have a look at those as well. So I think it's important to get an understanding of this picture for the Asian markets and also what's going on with the US market. So let's quickly look at the US markets. Well, we'll look at the Shanghai first, just so you've got the same. It's the same picture as this, but slightly sort of different when we look at it. And this is the way we're looking at it here. So essentially, we're looking for 5 waves up, and that would be the 1, the 2, the 3, the 4, and the fifth wave up to this high here, and we'll sort of expect some sort of A, B, C correction across here. This would also be at the level there, this particular level here, the same as our market at the 4,600 level. So it will dance across that level there. The normal thing for this, when a market moves up here in 5 waves, is for it to pull back in 61.8%, which would be down here. But in this case here, we can see that there is support from this cluster in through here, as it was here. So large numbers and sort of special numbers like this tend to sort of hold the price as well. So we'll see the 4,600 on our market hold that reasonably well. We'll probably see it come back to 45.50, but could come back to the 61.8 retracement level, which is 4,620, 30, somewhere sort of in there. But look, bottom line is 5 waves up, 3 waves back, or some type of correction across here, and then a move to the upside there on those markets there. So when we come and have a look at the US markets, this would be the US markets here. Like I mentioned, they've got a slightly different wave count in terms that would be looking for something like this here. You can bear with me here, in like that here. So we're looking for this particular structure here. So in this case, we're looking for a wave 4 pullback, 1, 2, 3, 4 here. And normally the case with that is a 38.2 retracement level. So from the bottom of the third wave up through here, we'd be looking at some type of ABC correction coming back here. This is the S&P 500, so we could look back at 1320 as a low point, but normally as a guideline it pulls back to the third, fourth wave of 1 less degree, which is actually quite higher up here. And also in here, as you know, we've got the sub levels in here, so 1300 is the main number, then 10, 20 and 30 sub levels there. So somewhere in here would be looking at that, but essentially a fourth wave here and then a push up through there. Now the S&P 500 is dragging its feet a little bit. The S&P 1000 is a little bit higher towards the high up there. You can see this previous high up here. So that's one of the so the small stocks are taking it a bit higher basically, and that's what we're finding in the Dow Jones as well. The Dow Jones is, I mean, the S&P 500 has moved up quite a lot, hasn't it? I mean, our market has been quite sluggish and still down here. The English markets and the European markets are way up here as well. So yeah, having a look at the Dow Jones here, just bear with me. Okay, so Dow Jones here, but as you can see here, the main point here is we're looking, there's actually 5 little waves. From this point here, we've been counting 5 waves all the way through up here, and then even in this little 3rd, 4th, 5th here, we've been counting the 5 waves in here, which we'll talk about shortly. But essentially, this up for 1, back for 2, up for 3, back for 4, and up for 5 through here. Now, this can also be, by the by, a and a B and a C correction to here, and that could be the top of the whole rally, and then we fold over from here. But I don't think that's the case, as our Elliott person had pointed out before this even leg started down here, that this particular structure coming up through here, this 3-wave structure as an ABC, is corrective. So that means that this whole pattern here would be an A and a B and a C as a flat correction. Yes, it's possible to be a triangle as well, but yeah, don't think so. So we'll see how we go with it anyway. But yeah, looking for higher ground there. It is interesting though, and we do say higher ground because, and the reason we say that for is because of first of all the Dow comp here, which the comp, as you probably already know, is based on 60 companies rather than 30 companies in the Dow, and you can see how high that is there. And as Gann the man would say, a double top is never the end of a bull campaign. So after a reaction here, a 4th wave we'll call it, and then a push higher through there. So the same with the Dow transports as well. We can see that we've made even new highs up here, and this is one of the leaders for us here, so that's why we're pushing that barrow to up the hill on that one. So, and it's the same with the English markets as well, as we pointed out last week as well. We've got the FTSE's way back up here, which is good. So also looking for this to pull back here, and we understood that it would gravitate across the 6,000. We knew that the supply here, the highs up here would do that. But when we look at the FTSE 250, we see this situation here, and we were quick to pick this up as this was occurring through here. So we understood it. So anyway, now we're seeing this short-term correction, and that's why we didn't put out any trades, not many anyway, on the long side for Wednesday, Thursday and Friday, because it was about getting trapped up there. So a bit of patience there was starting to come in handy now. So we'll look at this ABC correction through here, and then we'll look to reposition ourselves to the upside there. I think that's all on the sort of daily chart here. Yeah, I think one of the interesting things on the daily chart here is our local market here. The slow moving average of 100 on the weekly chart for us here, it just comes in and pierces this top here really nicely for this market here. So the slow moving average 100 is there. The other thing that I wanted to point out too that that's on the cards is let me just see if I've got it here. Just looking for a stochastic if I can. No, I'd have to pull it together here. No, I haven't got it. But look, essentially, this move up here for the stochastics and most indicators is overbought, yeah? But for the weekly, for all of these, including the Dow Jones, is that the weekly is just coming into a buy signal on these. So what we're trying to do is we're trying to say to ourselves, okay, it's overbought on the daily, so we want to see that come back and correct a little bit, but we want to pick that swing up on the weekly there. So that's what our aim is. And just sort of breaking this down a bit further here into intraday here. I know it's a bit messy, but essentially we're looking for up for 1, back for 2 here, 5 waves through here for the 3rd wave, and then we've got the 4th back to here and the 5th up to here. So we're looking at an ABC here. Might be a bit clearer on this one. Right, so yeah, so we've got this 5-wave structure up here, the 4th wave, the 5th wave that we're looking at. Then we've got this A, B, and C here, but this is across the 4,600 here. So what we're looking for here is a corrective activity this week through here, but eventually finding support. Now this can pull back to the 61.8 retracement level, which is down at 530 here, but is more likely to sort of linger around the 45.50 here, depending on what how the Shanghai market goes at 2,800 there. But we've got a tricky little event ahead of us. But I say just chill out. We'll wait for it to unfold and then move back in on that side of the fence there. Okay, I think I'll just move straight on to the drivers so I don't rabbit on too much. So on the driving side of things here, this is the copper market that's been driving us and our dollar and so forth. We've had this nice sort of wave structure up here. We know that the 450 is the ceiling on this here. We know that we'll get some sort of fourth wave pullback through here and then a push up through to the 450 here. And then we'll see another correction. But look, as always, we knew that being above the 400 was a positive sign. And as it moved up and got support on these minor levels through here, then we know it was fine. Look, essentially, this is still going to sort of muck around in here somewhere. But the point is that it's going to deliver a positive outcome for our markets. And essentially, that's what's been happening. And yeah, you know, the ASX 200, as I mentioned, has been quite sluggy compared to the other indices. The other aspect we need to look at through here, if you just bear with me, is BHP on the local market. I don't have it. It's on here. Just bear with me here. It's just worth a look anyway because. As you know, I kind of consider BHP in the US to be our sort of market here, and it's at the 95 here, so it's a bit like the 45 on the local market. But what I wanted to point out here is that there is quite a nice clear 5-wave structure from this low here in terms of the 1, the 2, the 5 waves. Won't go into that, but the 3rd, the 4th, and the 5th here. So what we'll be looking at here is the A wave, the B wave, and the C wave here for wave 2. So much the same as the ASX 200. Once this is complete, we can look for it to go to the upside. But once again, this can pull back the 61.8% from here to here and back again. So, and this is what our local BHP will be sort of going through as well. The other important point here that I need to point out is that, like the US markets, this BHP here is much closer to its old highs than our BHP is. Ours is much lower down still. And I know from experience that our market can be slow to get off the ground. But once BHP, if this does push up here quicker, then our BHP can really move along quite quickly and pick up a bit of speed there. So just bear with me here just to have a look at this. But you just see how much lower down BHP is down here in compared. You see how that's sort of much lower down through here. I don't know if you remember, but when we were looking at this run up through here, when BHP is coming up to 50 here, but it was going up to 100 in the US there. BHP in the US was like way up there before we even started. We were really sluggish here, but then it really jumped, really pushed off, so kind of where we are lagging here. That's my point. And a good support after this little corrective pattern through 45 here, then we'll be pushing up again through there. But it is a little bit sort of scary because we do have a 5-wave structure down through here in terms of the 1, the 2, the 3, the A, the B, the C for the 4th, and down for the 5th. So it's really quite normal for us to expect a 61.8 retracement level back up to these areas here. So we still need to treat this move up as corrective, but we'll see how we go, because it's looking on the US markets, it's looking more positive than it is on our markets here. Okay. So, okay, that's that. I just want to come back here. So that's the copper. That's okay. That's our base metals and materials sector being looked after. Now, the oil market here, we understood that we're moving back up. We understood oil's moving with stock, not a big deal. As it was moving up through here at the 95, we understood that support on here would see us higher, and we were counting the waves up there. If you remember, we were looking for 5 waves up, so we're going for the 1, the 2 came in, the 3, the little 4, and then up for the 5. And in the 5 there was a 1, 2, 3, 4, and 5. So we're getting up there. So we knew that there would be a reaction here. We understood that it's only natural for that, and that would line up with stock as well. So that's all going according to plan. And so what we're sort of looking at now is we're looking at how big this correction is going to be through here. And this will be just the first leg down through here. So we'll see some sort of retest back up through here. But there is plenty of support here. There's a lot of volume in here because you can just see that there's a lot of price activity there. So there'll be a lot of volume there, that support. So if the 95 became resistance, yeah, rather than support that it is now, then we'll see this in strife and coming down further. But that would line up with stock, as I mentioned. And the gold market here, this is the bigger picture here, well, medium sort of picture, 4-hour chart here. This is this whole pattern across here. We can see this as bearish or bullish, but what interests me the most here is this pattern going up through here. And as I see it so far, it's a bullish pattern. And what I mean by bullish is that it's got a 5-wave structure, and I would see this as up for wave 1 and wave 2 in here. This is all the 3rd wave in here. This is the 4th wave, because if wave 2 is simple, wave 4 will be complex. And this is not finished yet either, so it can move up even further to test these old highs up through here. So we could put this up there as a C wave, but we're looking at this as being a wave 1 up through here. And then we'll see a wave 2 come back. So up to the 1560 up here, thereabouts, and then we'll see an A and a B and a C correction here as the stock pushes higher. So yeah, that's all sort of positive on that side there. And on the currency side here, just going to start with the US dollar here. So right. So there is a positive picture here, and we need to stay with this in terms that, yeah, look, 5 waves up here for wave 1, then an A and a B and a C here for wave 2. So we'll look for this to be up for wave 1 here, back for wave 2 here, and then up for wave 3 here. So we're looking for the US dollar to get stronger, which in turn would make the euro weaker. But that doesn't really fit the picture. So we just got to be a little bit sort of careful in dealing with the euro at this stage. But what we can say, and what we normally do is use the level. While this market is above the 75, we have to maintain that bullish picture, and we'll work with that direction, and that's what we'll do there. The euro will be doing the mirror opposite, and with the euro here, we've kind of, as you know, that we've been working with this last week. We're working with this 5 waves down through here in terms of basically 5 little waves here down for wave 1 and then back for wave 2. Then we've got our 3rd wave coming in nice and strong and powerful. Then our 4th wave and our 5th wave here. So basically we've got 5 waves down, which would give us an A wave or wave 1. Right? Then, but the point is that because we've got 5 waves here, it means we get an ABC correction, and that's the same as the dollar index. We get the A, the B, and that should be the other way around, but that's okay. This is the correction here, and we'll talk about that. So in this correction here, if that correction, the weakest point in Elliott is the corrections. Unfortunately, there's not enough rules to go with them. This particular A should be that little A to there, B to there, C to there. So this can be the correction, or it can double in size. Let's just assume that this is the correction, and we'll be going down from here. If we're going to go down from here as a trading point of view, then we'll look at that now. So okay, this is a 2-minute chart here. So in terms of trading it, we would look at this as down for 1 and A, B, C for 2, down for 3, back for 4, and down for 5. So this is some sort of retracement level here, retracement. So we would look at this going 61.8% from this here, coming back up to here. So we could see this as a retest of the 143 here. So what I was thinking is that if this market, when it opens, comes in to the Asian section on Monday, then if this market does push up through here, if that's the case, let's just look at the different sides. If it comes back up through here, that's fine. Now, it would be a retest of the 143. Now, if it finds support on the 143, that's fine. We can look to go long there and would scale in through group 1 here, 10, 20, and 30. And you know the rule with the top of group 1 there, so that's fine. So that's okay. Now, if this market comes up through here to retest this to pull back up for the 61.8 retracement level in here, then allow that to be. And if it fails from that point and then comes back down and finds this 1472 here as the resistance, like it is now, after it's gone up through here and locks back under here, then look to go short through here, the 65, it should be up there, the 65 as a trigger, then the 50 adding under here, and so forth for the bigger picture to the downside. Now, if it just falls straight through from the downside here, then you need to work with the 50 here and just keep it light within here, because the aim is to get under the 142 here. Okay, so you just need to allow it to see what it's going to do on the Monday, and then as the European markets open as well. But it should establish that particular trend in the Australian and Asian time period, and then add to it in the European session there. So, yeah, the Australian dollar is a little bit different. And looking at the 30-minute chart here, just sort of going back over it a little bit. Essentially from the 104 here, as you know, we've had 5-wave structure moving up through here, and that's fine. That's what we got, what we wanted. We understood the 108 and the 107.72 here was important, and would be looking for corrections at those levels there, and that's exactly what we're getting. So we've got 5 waves to here. Yep. So what we're looking for now, what we're looking for from this 5 waves is an ABC correction. Now, we may have that already in play here because we've got a very clear 5-wave structure here, and I'm just going to put that on the 2-minute chart there so we can see that. So this structure here that we're looking at here, and here is this little one here. So, okay. So this little structure from this low here is a very clear 5 waves to the upside here. So we've got the wave 1 here with 5 little waves in it, then the ABC here for 2, and we've gone all the way up for 3 here, and that would also have 5 waves in it through here in terms of the 1, the 2, powerful 3rd wave, complicated 4th, and up for the 5th here, for the 3rd, the 4th, and the 5th here. If this is 5 waves up through here as part of the bigger picture, then we should get, after 5 waves, you get a 61.8% pullback. So from here, from this high here down to this low here, this is our 61.8% pullback. So that comes in nicely here. Yep. So we've got this structure coming down through here. I think this is just part of the A wave though. So what we're looking from this 5-wave structure, we're looking for an ABC, very much like what we're looking on our ASX 200. So it becomes sort of interesting at this point here because they have been moving together. So it appears that we've got 5 waves down through here. So it does appear that this would be a little ABC correction here for a B wave back up here and struggling at this point here. So we can expect this market to follow stock in the morning. So we'll see this coming down as an A wave, a B wave, and a C wave coming back down here. Now, there is strong support at the 107, of course, but this support here interests me more here. This 107.20 here and the 30 here, this whole congestion here is a nice strong support as well. So as long as the market stays above that, then we could have this possibility over through here as well. So, yeah, I think the best way to handle this situation, I've given it some thought, and it's really just to allow the morning session to play out somewhat in terms of the 107.50 here. So you need to be long or short from the 107.50 here. So, but you need to find it as support or resistance, and that should give us the trend for the next session. So that's what we're looking at this point. I know that's a little bit sort of complicated, all of this, but the support is the 20 here up to the 30 here, and the resistance obviously is the 72 number through here. So that's what's sort of holding that. But we're looking at this being a 5-wave structure down, a 3-wave structure back up, and if that's the case, then we'd be looking for this to come down through here. How far it comes down is another question. Like I mentioned, there's a lot of support in this little group here as well. So let's just see how it sits on top of 107.30 and 20 here. If it comes into this area here, then comes back up and sits on here, then you need to go long from this point here. But any trading on the sort of as the market opens from New Zealand into Australian times here, allow a little pattern to develop on the midpoint, the 50 there, and then trade it from that point. But we are looking for it after it's done its correction, very much like the ASX 200. Once it's completed its correction, this is the 5 waves up here. We're looking for the A, the B, and the C. Then be pushing up from that, taking these highs out here. So look, in a nutshell, we're like the ASX. We're expecting a correction in this area here, and we need to allow it to unfold before we can catch the next trend up. The next trend up will be worth catching, and it should be quite long and strong like this guy here. And our trade, as I mentioned last week, once we got to here, was not to lose money in this area here, just allowing it all to play out. What we're actually looking for is support on the 72 here, the 107.72 and the 108 here, and our trade from this point would be at the 1110. So we've got a nice 2 full points to go for. The trick is just like I mentioned when we got to here, was not to lose money and get really involved in all of this, because it just gets a little bit tricky here and a bit complicated to work out. Sure, it's a different point if you're scalping, but not going for the trend. So yeah, so we want support really on this area here to go long, or we can pick it up down through here once we understand what type of correction we've got through here. Okay, that's about it. But just sort of recapping on our local market here too, for the cash market and the futures, is essentially we've got 5 waves up through here. We're looking for some sort of correction, but once we develop support on that, then we can go long again. So it shouldn't be too much. It might even be sort of Wednesday or something. So we'll see how we go with that. But whatever happens, we want a retested support firmly planted on the 4.6 here. The 61.8 retracement level is down around the 45.20, but we may only end up coming back to the 4,500 here. So we just have to see how the Shanghai market settles at the 2,800, and also the Dow Jones as well. The 38.2 retracement for the Dow Jones is back at 12,500. That was mentioned last week. So it still can play into that. So we're facing a little unknown in the Monday and the Tuesday. So we just really want to sort of keep clear of that and then look for positions mid to later in the week. Alrighty, good morning and good luck.